following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bids. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Seek to know the truth. When you hear an opinion and believe it, you make an agreement, and it becomes part of your belief system. The only thing that can break this agreement is to make a new one based on truth. Only the truth has the power to set you free. The question is, how do you know whether it's truth or not? So why this is a card you really got to think about. Market-wise, let's take a look at it out here. We have the Dow Industrials up 121, Nasdaq up 36, S&P's up 16, gold contract down $21.30 at $1,335 an ounce. Silver down 11 cents at $20.18 an ounce. Platinum off 10 bucks at $1,091 an ounce. You get copper up 6 pennies at $2.21 a pound. Light sweet crude up almost $2, trading at $46.67 a barrel. Bonds. 10-year note down 21.6, 132.15. 30-year bond off 2 points, 173.23. Both the notes and the bonds are coming down with volume. That's setting up lower prices in the notes and the bonds. They've gone topside in a huge way, but bottom line, they're going to do a retracement, and they're doing it right now. King dollar. King dollar right now is down 65.6 at 96.52. What King dollar did is that King dollar rejected lower price, had lighter volume. King dollar wants to break topside and get into that 98 area. The euro is trading at $1.10, and the yen is out there at 104.77. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We got a cash S&P up $16.50. You're over the high of 2015, and now you're getting away from that high in a big way. We're at 2153. 2134 is the high. That's saying that S&P is going higher. Dow Industrials. What has the Dow done? What the Dow's done is got up into the high of 2015, May of 2015. That's 18,351.36. You're at that level right now. Bottom line, we'll see whether the Dow gets away from this number. And what I mean by getting away from the number, folks, is that there's one thing of testing it. There's another thing when you get away from it. You get away from the number, you can go higher. So Dow right now is right at the number. Bottom line, let's go to the bonds, because what the notes and the bonds are saying is that next few days this market wants to go higher. Notes are down with 1.3 million contracts. You already got into the lowest swing point of 132.14, and we'll see whether that holds. We got to 132.11. It looks to me that, number one, it's not going to hold, and it looks like it's going to go back to where we went topside from the day that the Brexit vote was done. That number there is 130.21, and we're at 132.14. We go take a look at the 30-year bond. 30-year bond set up the same way. We've done 288,000 contracts. Right now, you're at 173.20, which is much stronger than the 10. But bottom line, I suspect the deeper that it gets into 173.25, you're only 5 ticks in, the higher the probability that we'll go all the way down to the bottom of that. King Dollar. What do we have with King Dollar? King Dollar back down. Let me go over to King Dollar for a second. DXU. So King Dollar's back down. Rejected lower price out here today. We got down to a price point of 96.07. We've had volume of only 18,000 contracts. You know, you're coming against 40,000. A rejected lower price, so it looks to me like King Dollar wants to get up into and over this 96.70, which was the high of the 24th, and go up and test where its downdraft was. It's just the opposite of a breakout. When you get a breakout, folks, things like to come back and test the beginning of the breakout. You get a breakdown, this wants to go back up and test where the breakdown come from. Now, going up and testing where the breakdowns come from does not happen as often as when you get a breakout. They like coming back. Gold contract. We go over to the gold contract. What we have with gold out here, gold is down 21 bucks. You get 239,000 contracts. We're trading at 1334. I expect what gold's going to do is go down somewhere into this 1280 area. You know, that's just the top of the consolidation that it's been in. What you do have, you get a couple of these gold equities that are pulling back with an expansion of volume. That is saying that lower prices are coming inside that sector. If we take a look at the silver, and silver has rejected, well, it's taken quite a while for silver to pull back. Silver, folks, had done a 1 to 1.618 ABC structure on the way up. That is a problem in the silver market. It's also a problem, I suspect, going to be in the metals market. When you do an expansion of 1 to 1.618, whether it's on the way up or the way down, most times it's an immediate change of trend. Bottom line, silver, volatility in spades. I suspect silver, number one, is going to go after the $19.28, which was the low of the 8th of July. And we'll see what type of volume comes in silver. You know, you get volume in silver, man, $18 would be coming at us, and that's pretty intense. Let's go to Tom in Tampa. Hey, Tom, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. Yourself?
Hey, man, did you see volcanoes down there in the Costa Rica?
You know, we didn't get to. I didn't go that far on that side of the coast. I was on the West Coast, but we saw just about everything else. But it's a beautiful country. There's no doubt, man.
Yeah, it sure is, man. That's what I hear.
Yeah.
That's what I hear. Hey, Tom, once gold pulls back into that top end of that consolidation, you're thinking about around that 1280, 1282 area. I mean, do you think we're going to get back up there at 1400 or 1412 confirmed ABC up?
I do, but when? I know you're in the option market, so when are you looking to do that?
Around September.
September, okay. So this is a tough one, folks, okay? So Tom has options on the GLD. Now, what has happened is this, is that you have a confirmed ABC structure on the way up inside the metal in the gold market, and the XAU and the HUI. We hit 1377. The target...
I can hold, Tom, if you need me
No,
to.
yeah, stay right there. We're going to go through this. Our phone number is 877-927-6648. Dow right now is up 121. You get the NASDAQ up 34. S&Ps are up 16. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with Tom from Tampa. We're talking about the metal market, the GLD in particular. So Tom has the... Okay, so here, let's go through the ABC structure first. Okay, so what we have is this, folks, is that you have a confirmed ABC structure inside the gold contract, inside the XAU, inside the HUI. Bottom line, the gold contract has hit 1377.50. The ABC structure is saying 1428, and if we turn around and if I put the gold contract on a continuous contract, what you're going to see is that, and it's always cool when this happens, is that the 1428 lines up with a swing point that's laying out there and has been laying out there since August of 2013. Okay, so that being said, what we also had is that when the equities themselves, some of them, folks, you know, were up 450%. I know that's hard to believe if you're not in that market, but bottom line, that's what they're up. So when we were looking at that, Tom, I believe you get the gold report anyway, right?
Right.
So when we were looking at that, we sold just about all of them. I only own two stocks right now, okay? Inside the gold report. I sold everything. That's the bottom line. And it has to do with the market doesn't give you 300 or 400% in 6 months. It just doesn't happen.
Right.
And it happened.
Right. Yeah.
Now, the silver, as you can see what I talked about this week, the silver contract went up a 1 to 1.618 expansion. And I've found, when I'm on the air, I say that, okay, most times, I've never seen, personally, okay, it doesn't mean it won't happen, but I've never seen an equity, a future, a commodity do an extension of more than 1 to 1.618 without a pretty heavy reversal. So, now where the divergence would be like, okay, well, that's silver, it's not gold. But to me, it's saying that, okay, man, we're in for a reversal here. So the problem with a September time frame is that we're already at, what, July 12th, you know what I mean?
Right, yeah.
And
yeah,
if we get, what normally happens is this, is that we have not had a huge retracement inside the metals market since it took off in January. Well, money's not that easy to make, you know? So it's like, okay, man, well, maybe maybe the 1280 to me can do it. But guess what? Maybe it will go all the way back to the bottom of that, which is 1199. It really freaked people out.
Right. Yeah, that's what's going up and down my spine right now,
Listen,
too,
it's a tough one.
Yeah.
I can tell you this. It's easier now. And if you heard, if you were listening this morning, it was harder this morning. I mean, I've been saying this like for 3 days now. It was harder this morning than it is now because this pullback is happening, and you have the equities coming back with heavy volume. If we come back with heavy volume tomorrow, man, this thing will be fast and furious on the way down. And it looks to me that between the bond market, bonds look like they want lower price, so that means that the Dow and S&P could get higher. The dollar looks like it wants to break topside. That means metals could go lower. And then really flip people out. And, the NASDAQ and the small caps, folks, are still weak. But guess what? We're going to be Wednesday in the market. I can't see the market pulling back tomorrow. So it's like, hey, guess what? Maybe the rest of this week the market goes up, and then it takes another 7 or 8 days for it to turn around. So to answer your question, I would trade it. I guess I'd get out of it, man. Listen, this is the bottom line, Tom. I got out of it. Okay, I sold it. That's the way you got to look at this whole thing. It doesn't,
Yeah.
Longer term, I think, first off, I think the run has been extraordinary. But I think watch this. If we go over to Barrick ABX. So Barrick is going to be one of the first ones coming out with their numbers. They're coming out on the 27th, right? So Barrick is down $1.25 today. You've done 26 million shares. We had just made a high out here with 27 million, so it's still going to do 30 million. But Barrick itself is saying that wants to go back to where it broke out from, which is $18. Now, that's not bad if it holds 18. But if it doesn't, like the metals like to really flip with, screw with people's heads. So it's like, okay, man, are you going to go back to 15? Well, there's nothing even wrong, folks, on a retracement at 15 because we just came off. Barrick just went up from $7 to $21.50. So that would be just a 50% retracement. And a market that wants to go higher. I wish there was an easy answer for you, man. I'm not kidding.
No, man. That's a good rundown. Tom. Yeah.
Oh, it's a tough one, man. It is. Because what happens, folks, if you're not in the metals market, I'm not a gold bug, but I love the metals in general, and I know they're never going to go higher forever. But my macro feel is that we're going to go a lot higher, not a small amount higher. But the question is in Tom's case, is that can you do that in 75 days after we've already just had a wicked expansion, so. Hey, you know what? Another thing you could do, you could turn around. Let me see this for a second. GLD. There's another one. I don't do this in the gold report, folks. Okay, but I was thinking of doing it this week. So what you can do is this is where this gets interesting, and don't do this unless you trade options, but. If you really think, I think we're going to pull back. So let's say with the GLD. The GLD is at 127, right? You can flip this around now. Okay, so the GLD can pull back to, 120 in a heartbeat, right? That was the high that was generated out here February 11th, right? Let's say it's 120, right? Another way of looking at this, you can turn around and you could change the perspective on that, and you can go out to September, and this is pretty wild. And if you're a bull, you'd be doing this, folks. Because if you sold a put, what you'd want to do is that you'd want to turn around and say, okay, I want to buy them at 120, but you could sell the 120s, and you could collect 86 cents, or sell the 120. Yeah, that's not bad. That's just in September. If you go off to October, would be more money, And then what ends up happening there, of course, folks, is that you better make sure you want to buy it, because in that particular case, if you want to buy it, well, it comes down at that price, and you're going to save another $1. Are you up enough to basically turn around and get your principal back?
Oh, yeah. I had principal and then some.
Okay. So
And
that's what you should do.
Yeah, that's what I'm doing, Tom. Yeah, definitely.
That's what you should definitely do, man. Because what you always want to think about, and this is what I thought about when we were selling everything, that all that was going to happen is that we weren't going to make more money. If we didn't sell, we were going to lose money. You see what I'm saying?
Right.
So what happens when you sell, folks, and particularly, you're up huge amounts, it's like, okay, so that's where you got to say, don't get greedy, because the market doesn't give you 200 and 300%. It just doesn't happen. Well, it gave it to us this time, but you got to take it. If you don't take it, guess what? Market takes it back, man. Cooking, brother.
Thanks, Tom.
Thanks, man. Stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 121. We get the NASDAQ up 35. S&Ps are up 15. As we do each and every Tuesday at 20 past the first hour, we have our man, Mr. Basil Chapman. And don't forget, folks, Basil has an outstanding show every trading day right here, 11 to 12 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, you can test drive The Opening Call 2 weeks, absolutely free. The way you do it, you go to TFNN. You'll see newsletters across the front. Hit the newsletters, hit trading newsletters, can test drive The Opening Call 2 weeks, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you? Welcome back.
Well, it's great being back. I was watching you and Tommy do the program. Awesome
wasn't
program.
Wasn't he good? Yeah, wasn't he? He just took the lead. It was fantastic to see.
He definitely has command of that desk, man. It was impressive. I was digging it. We were all digging it. We were all watching it, and as we were watching the waves roll over the beach, it was perfect.
Oh, that's fantastic.
It was,
very good.
It was.
Isn't it amazing that you can take this technology wherever you are?
That's what was so amazing, man. I mean, we were in the middle of nowhere, really, and it really was interesting that, cell phones, folks, and internet is everywhere now, just about everywhere. I mean, and yeah, and it looks even cleaner and clearer there for some reason. I mean, do you know what I mean? Because
that's because of the sunlight.
Just because where you are. Yeah, I know.
Yeah. But it was terrific. Thank you for the opportunity. That was good.
Thank you, man. So where we at, man?
So where we're at is today is the 12th of July, and we have made a new all-time high in the Dow. That was something I've been waiting for a long time. I even had certain shows saying, remember the last webinar I gave?
I do.
Was what happens if there should be, or what happens when you get to a new all-time high?
Yeah.
What are the implications? So for me, it's really important because basically what it says is if you look at the right, I'll just skip all the way to the right side, which is on the left is the daily, here is the weekly, leg D, and we always, in the Chapman Wave methodology, we're always looking for higher peaks and we count them. Well, the fourth highest peak is where you can anticipate other things could happen. They don't have to. That's where you got to be careful. It's like a yellow light. So there are a whole bunch of things that are going on here. In this particular chart of the Dow, there's this big W formation that we were looking at in the weekly chart. And one of the things about a W formation is when you get back to the top of the W, you don't really want to hang around too long because you're just using up too much energy, as you can see with that V shape, and it fails. So this time we went sideways for a little while, hit 17,963 on the Dow, and in 3 weeks we've gone to an all-time high. The moment we broke, and my contention has been that if the Dow breaks above 18,351 to 18,352, my monthly chart goes into a buy mode. That's got nothing to do with whether or not you couldn't pull back very sharply. It just says that there should be at some point a leg D after C is finished. So that's, for me, a very positive moment. And if you look at I'm not sure, I think you can see it. The MACD, the moving average convergence, is just about, the month is only halfway, not even halfway through, and the MACD is just about to turn positive for the very first time in a long time. It actually started declining when we made the May high of 2015 at 18,351. So either it's got a long way to go, or there's going to be a deflection lower and a sudden pullback, and we can talk about that in a moment. But most importantly, the stochastics at 83 in the monthly chart. And for me, these are all good signs. And also, you've got this very big yellow circle. And this is part of the technique that I use. It's called the Chapman Wave stalk leg formation. So the leg is really not peaks or anything. It's just a long series of highs. Eventually, it stalls. And then it forms an oval formation. And that oval formation is very specific. And it tells you that if there's a break to the upside, that break to the upside becomes what I call the neck. So this is the leg, this is the body. It looks like a stalk on one leg.
I remember I'm trying to shoot a few of those.
Yeah, I know. In fact, you might remember when I first came onto TFNN.
I do, man.
I spoke about, you said, stalk, what are you doing? Anyway, so that's, to me, this is all very positive. But on a shorter term basis, we're in leg B right now. And that says to me we should make a peak B, pull back, and then make a leg C, which will be higher than whatever. I can't give you this. This is just a leg B. I have to wait for a lower high bar. And therefore, there's still two more peaks to come. And at that point, there's no question that I probably will get quite cautious, because in leg D in the weekly chart, and with such a fantastic move to the upside, you should get some kind of a pullback. So I'm expecting either towards the beginning of this coming week, maybe at the end of the week or the beginning of next week, I will get some kind of a sell signal. Meantime, we've been very lucky. We've got some stocks that have done very well, up between 12 and 24%. One stock I've spoken to you about that I said we've just started a position in, and that was in U.S. steel.
Okay.
And the thing that I look for, there are certain patterns I always look for. One is this cup formation with a left side, right side price time match. So 20.55 was the high on the 20th of X as a symbol, US Steel, and it came down to 12.77. We went long at 17.95, and today it hit 21.8. It actually went a little high. It's at 21.08 right now. But once again, we're in leg D. Now, one of the things I talk about in my techniques is there's a pattern that I call the Chapman wave cup and ladle. When you get a handle, it means that you go onto the left side lip and you've taken a little time to make a little cup formation below. This snaps right through. But the objective is that if you break through, then you can expect at least a leg D, but we're in D, and at that point you can expect a retest of the lip. So I think that US Steel is telling me a whole bunch of things. It's saying that the weekly chart is broken out, and that's very important. There was tremendous resistance. There was a dashed line resistance that went all the way back to April of 2015. And sorry, 2016. Now we've broken out, and 2307 is the 200-period exponential moving average. So we're looking at that, and this is the first time that the monthly chart is actually improved by breaking into leg B. So I think that this is telling us a little bit about the economy. It's saying that the economy is actually stronger because of some of these areas, like Alcoa is also doing well. The steel index, SLX, is doing well. So I think there's underlying strength. So at this particular point, my bias is to stay on the long side as long as we can. If there's a sell-off coming, I'm probably going to be looking to be buying some of the things that we missed, that are the stocks that have moved very well. So I do like what's going on, and it was just a pleasure to see after a year and May to just over a year to finally see a new all-time high in the Dow. It took a long time to get there.
Yeah. Well, I guess, it's going to be intriguing to see now what happens with the NASDAQ, because the NASDAQ is, needs quite a bit of boost to get up into that area. But bottom line...
Because it's got some of the very big stocks. The Nasdaq top 4 or 5 are not. Some of them are not doing well. Google's not doing all that well. So I think that's a bit of a drag. The IWM actually looks a little bit stronger than the Qs at this particular point, and it's just going to be interesting to see, because I did get a buy signal, a very short-term buy signal, in the inverse of the TLT, that's the TBT. So that says to me the TLT, and we're going to have to see, this is the first time we're getting some kind of a reversal in the yields, and we'll see which stocks. For instance, we still have AT&T, which has done fantastic. That's a dividend stock, so it might be impacted. So this could be a rotation into different types of stocks right now. So some stocks that have done well might pull back. I'm going to be watching this real closely, because this is an island reversal in the bonds.
And folks, you can come over to our website at TFNN. You go to newsletters. You go to trading newsletters. You can test drive the opening call right now. 2 weeks, absolutely free. And of course, don't forget, every trading day, 11 to 12 Eastern Standard Time, you can pick up Basil right on your cell phone, folks. TFNN.com, hit Tiger TV. Basil, thanks so much, man. Have a great one. Have a safe one. Look forward to the show tomorrow.
You too, Tom. Thank you.
Thanks. Stay right there, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go to Cheryl in Las Vegas. Hey, Cheryl, what's going on?
Hi.
How are you?
I'm great, thank you.
Good.
I just wanted to have a tip on how to reduce risk when we're doing spread trading, please.
And what are you trading?
Well, I did the demo and I won, but I did the demo yesterday on the euro yen for going long, and that one turned out really great. But it costed, let's see, I think it costed like $72, I believe.
This is on the Nadex platform, right?
Yeah,
Okay.
it was on the Nadex platform. And then I won on the demo. I won on the U.S. dollar Canadian going short on a spread for yesterday. I caught that and run on the reversal down. And but I know respectively each of them costed either $72 or $102 per contract. And I just wanted to know. I'm just still learning, but I just wanted.
And you're on the demo it's not real money. You're trading,
No,
right? Perfect.
no,
Okay, good.
no, just
Okay,
a
so when you say 102, that must have been. It can't cost more than 100. So folks, if you haven't test drove the Nadex platform, you can come over to our website, bring the platform up. What Cheryl's doing is that she's trading currencies inside the platform. When she says $72, what happens is this. Every spread is $100. So it's $100. And what ends up happening, if she's, in her case, she was buying them, okay, so it was $72, because if you were selling them, you just start with $100 and you take the 72 away from the 100, okay? So there's always different fluctuations there, Cheryl, okay?
Yeah.
So what you want to do is make sure that when you're either buying or selling them, that your risk is compatible to what you feel like, okay? Because your question was that how do you hedge it? You don't want to be trading this and then trading that and hedge something else in order to trade the currencies. That doesn't make any sense.
Right.
Okay? You either buy or sell currencies, end of story.
Right.
That's it. If you were a large money manager, and let's say when there's a hedge taking place, folks, what happens is this. Let's say that bottom line is that we're here, okay? But guess what? We do a huge amount of business in Britain. Well, what would have just happened is that everything that we sold, okay, would have got more expensive if, in fact, we're making it here and putting it into Britain. So a hedging technique like that would be appropriate, understanding that you have a hedge gone. Now, just the opposite, if you're doing, the people that were doing business in Britain and, bottom line, selling it somewhere else, well, they're going to make a lot of money whether they had a hedge on or not. So you just have to get more used to and I'd say just take your time with this, as to whether you want to be long or short the currencies that you're trading, Cheryl.
Okay.
You know, it might be easier to just start trading some of the indices, because that's a black and white deal also. Like when you're trading you did the euro yen, so that means you got to know a lot about the euro and the yen, and then you did the U.S. Canadian.
Okay. Okay.
Well,
Thank you.
Okay, have a great one. Have a safe
You
one.
too.
Thanks. The currencies, folks, have moved in an incredible way. There's no doubt about it. So the volatility is inside the currencies. What I have seen is this. I like trading the dollar either against something, meaning that I think the dollar is going higher, which I trade it right now going higher, or, the last few years trading it going lower. And so and I happen to just trade that against the euro. It's just because that's what I've done. Okay, it's just a flat out deal. Okay, because inside the dollar index, I always quote the dollar index. And the cool thing about the index is this: the index has to do, the breakdown of the currencies inside the index have to do with the amount of dollar transactions that we do with those different countries. That's how that gets broken down. Just so if that is the breakdown, and the amount of trade that we do inside the dollar for the euro is 60%. Okay, so it's a decent breakdown. When you're just doing them flat out, it's a cut and dry deal, because what happens is that you look to say, okay, where is the euro versus the dollar? Now, I've never done the euro versus the yen, because my head gets twisted around on that. And I know Darryl likes trading that, but my head gets twisted around because I'm going to say, okay, hold it. The euro versus the yen. What's going to, Hey, listen, it's a great trading vehicle. There's no doubt about that. But make sure that you understand what you are trading, because, and it's a lot. What I've found, it's a lot easier, because we're in the United States, understanding where is the dollar going in correlation where the other currency that you're trading against is going into. So, our phone number is 877-927-6648. We go over to the XAU, the HUI. This is what you're going to have out here. And this is going to be intriguing to see what kind of volume we get, because it looks to me, by looking at a couple of the equities, we're going to have some volume on the way down here. Okay, so I'll finish up the conversation that we had with Tom from Tampa, too. So what can happen here, even though the XAU and the HUI are in confirmed ABC structures up, they very well can turn into another complex ABC up, because we've already done that. The first break topside inside the XAU and the HUI was on April 28th. Guess what? It got back underneath it again, broke topside again. That's a complex ABC structure. And where the complexity of comes is this. It means that it gets back into where the B point was. And the B point in the XAU is 1263. Right now you're at 1333. So that's, we'll see how the 1303 holds. But the bottom line, that is what a complex ABC structure is. On the HUI, what you have inside the Gold Bugs Index, that's trading at 263, and this is going to be, we're going to know quite a bit when we get these volumes in. That can pull down to like 236. If you go over to Barrick, and the reason, see, Barrick, folks, has two different things going for it. And if you haven't test drove the gold report, great time to do it. There's not going to be a buy the next couple of weeks, but you get it for a month for free. So Barrick, folks, watch how this shakes out. Barrick has had an incredible run. It's run from $6 up to $22. It's coming off the high with volume, but what we also know about Barrick is that we know that good old George Soros is in there in a huge way. Well, guess what? All traders like to make money, okay? And he owns 1.67%, 19.4 million. But there's plenty of other big traders that own millions of shares also. Well, guess what? When you're up 200%, okay, there's nothing wrong with taking money. In fact, depending where they get in. it's big money, you know. So what happens in that context is that it makes sense that you're going to get a larger retracement. You stay right there, folks. We're coming back right back. Our phone number is 877-927-6648. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 118. You get the NASDAQ up 32. S&Ps are up 15. Now, when you take a look at the Dow, so the Dow got over its high from the 2015, May of 2015. We're going to have higher volume, you know, and this is why. The high that was established in May of 2015, folks, only had volume of 692 million. Okay, so it was anemic beyond belief. Bottom line is not that we have a huge amount, but you get the volume, which is 749. I suspect what you're going to see is this. The NASDAQ and the NDX look to me like they're just about ready to give it up. Haven't done it yet, okay? You know, they're coming into their swing high from the 19th of April, and you talk about coming in there, there's no buyers right now. You got 19 million shares versus the last high that was established out here of the 19th with 42 million. But that's pretty intense. The high of that level is $111.44. Now we hit 111.59. You're trading at 111.50. And the most deviant thing that this market can do is push a little bit higher. Because the headline news is going to be that the Dow makes highs. The S&P already made highs. We take a look at the NASDAQ, and what you have is that what the NASDAQ has done is that the NASDAQ has come into its gap from the downdraft in January. That number, so check this out, this is pretty sick. That number is $115.51, and that's right where we're trading right now. So the NASDAQ, the NDX 100, would be saying it's flat for the year at this particular point. So what does it mean? Well, what I've seen, particularly Mondays and Fridays, you got to remember in the summer, you have light volume, they can push the market anywhere. Tuesday, Wednesday, and Thursday are the really sweet deals. The way the market is up today, that's telling me that tomorrow is going to be up. Then what you'll have, it'll be very hard to get the market to pull back on a Thursday when Friday's a light day. That being said, what's also happening is this, is that on Thursday, and this is before the market, and this is what's going to be really wild, JP Morgan's coming out with numbers. So the banks are going to be coming out with numbers. Now, the banks are weak. JP Morgan's at 63.28, but there's no reason that it can't run up to 64.15. So it's almost like when I'm looking at this, I'm saying to myself, you know what, man, this thing is just not ready to give it up yet inside the Dow and the S&Ps. The NASDAQ is, but the NASDAQ won't give it up until we see a few of these NASDAQ companies come out and have a problem. Like if we look at Amazon today, it's Prime Day, right? Amazon is down 536, but guess what? That's nothing. It was down, let's see, it was down 13 bucks. It's really rejected lower price. And Amazon, this is Prime Day for Amazon. The news tomorrow or tonight when we wake up is going to be huge that Amazon sold so much and Amazon still wants to go higher. Google is the problem. Google is a counter trend bounce. I can't wait to basically short Google. It's 720 right now, but more than likely we'll see Google trying to get up into 736. So and that's a big number. Apple, we know Apple doesn't have any juice. Okay, bottom line, Apple is out here trading at up 39 cents at 97.36. That doesn't have any juice either. So the setup is there inside the NDX 100. You stay right there, folks. We'll be coming right back. Dow Industrials are up 121. You get the NASDAQ up 32. S&Ps are up 15. You got gold down 23. Silver's down 15. Bonds. You get the 10-year down 22 ticks. The 30 off 2 full points. And King Dollar down 40 ticks. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man. Wow. I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Don't overdo. Always do your best. Always do your best, but don't overdo. When you overdo, you deplete your body, you go against yourself, and it'll take you longer to accomplish your goal. A lot of fact in that. Market-wise, let's take a look at it out here. We have the Dow Industrials up 120, NASDAQ up 34, S&P's up 14. S&P took out its high yesterday, cash S&P. Dow took it out today. Dow closed underneath it, but bottom line took it out. Gold contract down $23, trading at $1,333 an ounce. Silver down 13 cents at $20.17 an ounce. Both gold and silver, folks, want higher price. We'll bisect and dissect that baby in a few minutes. Platinum down $11 at $1,090 an ounce. You have copper up 6.5 pennies at $2.21 a pound. Light sweet crude up $2, $46.79 a barrel. Bonds, the 10-year down 20 ticks, 132.16. 30-year off almost 2 points, 173.28. Both the 10 and the 30 are coming back with volume. That's saying that the bonds and the notes are doing a retracement. They have some juice behind them, volume behind them. That's telling me that the Dow, the S&P still want higher price. NASDAQ is not even close to basically getting a big lift, but I suspect the NASDAQ wants a little bit higher price too. King dollar down 40 ticks, 96.55. King dollar rejected lower price out here today, had lighter volume. Well, King dollar looks like it's setting up. It wants to get over the high that was generated on the 24th of June. That's where it spiked. That's where all the markets had spiked, as a matter of fact. Bottom line, I expect King dollars wants to run into about this 98 level. That's a short-term bounce, but guess what? It's going to affect the metal market. Euro. The euro is trading at $1.10, and the yen is at 104. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. Cash is at 21.51. The high out here that we overtook is the 2134.72. And you're away from this, baby. So this S&P wants to get higher. Dow Industrials. What we have with the Dow, so the cash S&P took out its high yesterday. Dow Industrials took it out today, closed underneath it, but took it out. That's what the S&P actually closed over it. So the number we're talking about is 18,351. We got to 18,371. Bottom line, I expect Dow's going to go higher also. That being said, you take a look at the NASDAQ. The NASDAQ is the NASDAQ right now. This NASDAQ is ready to give it up. It's up 34 bucks. You're at 5,022. What the NASDAQ has done is that it's got into the gap. This is where the NASDAQ had gapped down. All the markets had gapped down, as a matter of fact, January 2nd. The bottom of that gap is 4,999. The top of that bar is 5116. Now, we'll see whether we can go up and out of the 90 points. It's real possible, though, that's where the NASDAQ is going after. You know, because what you have out here, the high in the NASDAQ, folks, is 52.31. So the high is 210 points away. NDX 100 also is weak. So the NASDAQ and the NDX 100 are the weakest indices. The NDX 100 is at 45.77. The gap on the NDX is 45.80. You know, so we haven't made it to that level yet. Today we hit 45.88. You know, back down. You know, we'll see if in fact the QQQ and the NDX 100 wants to hit its high. What does happen, harmony inside the marketplace, is this. Normally, if you get one indice hitting the high, now we get two of them. Bottom line, most of the time, most of them will hit. I don't expect we're going to see that this time inside the composite, because the composite is so far off those highs. Gold contract. What do we have with gold? Gold contract comes down today, 22 bucks. We're at 1333. Volume wasn't bad. Not a huge amount of volume. I suspect first we're going to go down to this 1329, 1308 area. It looks to me like gold wants to get back to about 1282. We'll see how it handles that 1282 level. Silver still is hanging high. Bottom line is that silver had a price spread out here today of $20.59 to 20.02. Had 79,000 contracts, slight expansion. I do expect silver's going to get hit. You know, silver is highly volatile. I expect we're going to see a hit in silver, and you know, we'll see whether they get back down to $18 level. 2039, no, not 2039. That's 1928. Now the dollar down is where I expect it's going to test at least. Okay, notes. What do we have with the notes? The notes and the bonds, folks, are backing down with volume expanding. That's telling me that the S&P and the Dow wants to still get a little bit higher. The 10-year note come down 19 ticks. That is trading at the 132.17. And what I expect you're going to see, this can come all the way back to its breakout area, which is the 130.21. So that's another 2 points in the 10-year. That's a monster move on the way down, folks. If we take a look at the 30-year, what we have with the 30-year, 30-year right now is down a point and 23 ticks. You've done 303,000 contracts. And the way that the 30-year is set up, it looks to me that, let's see. So this will be intriguing with the 30-year because the 30-year has to get inside of $173.25, 0.25. It got down to 173.07 and rejected at that point. You know, if it doesn't get inside there, guess what? It's not going to back down, but I expect that you are going to see it get inside there, and I expect that tomorrow. Okay, dollar index. What do you have with the dollar? Dollar out here, folks, rejected lower price today, had lighter volume, and these spikes that were in the dollar, that were in the equities, that were in the commodity market from the 24th of June have been getting tested all over the place. The 10-year note took it out in a huge way. The dollar index looks to me that it wants to get up and over this 96.70 and get into its downdraft, which is 98.91. You know, the dollar came down. It came down hard February 3rd. It retested that level on March 10th. So I'm looking at that's just a retest of that downdraft. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back with our man, Mr. Chris Gaffney, the president of Everbank World Markets, and we're going to be talking the markets, folks. It's a beautiful thing. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 120, had the Nasdaq up 34, S&Ps were up 15, and right now we have our man, Mr. Chris Gaffney. Chris, folks, you've heard him many times here at TFNN. He's the president of Everbank World Markets. Now, if you come over to our website at TFNN, you're going to see right on the top of the carousel, you're going to see the 5-year market-safe currency comeback CD. That's what we're talking about today. You know, if you happen to be a commodity bull, if you're in the CD business, meaning that you like CDs, you like to have a non-risk so that you get your capital back, this is a product that is not only a great product, but what you have is this. You have a product that is only $1,500 to open, but you can open it with $100,000. Your principal is 100% protected. You have unlimited upside potential. It's an FDIC insured product. It's IRA eligible. And now we're going to talk about what that product is. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. It's always a pleasure to be here.
And it's always great having you, man. I'm telling you, man. You know, we talk about volatility. You talk about markets moving down, markets moving up, people having strokes being in the market. I mean, it's like
record day on the equity markets, I guess, today, or we're going to close at record levels, or we did close at record levels, rather. So
no doubt on the Dow, you know, Nasdaq, I guess small caps still, you know, down a bit, but bottom line, yeah, no doubt.
What's driving people to those equity markets? I mean, you know, there's certainly a lot of volatility, and the commodities have benefited from that volatility.
Sure.
We're seeing, you know, the precious metals in particular get a nice run higher. But, you know, one of the things that's driving all the money into the equity markets is there's just no yield anywhere. There's nowhere to get any type of yield, and that includes for, you know, those investors that are typically CD investors.
Sure. Right.
And this is a way to invest into a CD. Your principal's protected. And while it doesn't have any guaranteed interest rate, it does have an upside potential tied to what we think are some commodity-based currencies. So, the idea with the CD is really to give investors a way to invest into what can be a volatile currency market and not have any downside, so have their principal protected.
It's so cool. And the currencies that we're talking about, folks, so if you haven't traded, this is what ends up happening, folks. You hear the headline news a lot, okay? And guess what? You know, Chris is in the commodity market, I am, but we don't suggest everyone goes in the commodity market because it's so volatile. But this is a product that you can take advantage of that commodity market and sleep because
right.
your principal's protected, which is amazing, okay?
And the currencies in this, Australian dollar, Canadian dollar, you know, Canada, that's you know, there's more mining companies headquartered in Canada than anywhere else. Number one gold producers are in Canada. You know, you've got Australia that is really a commodity supplier to China. You got Chile, which is a copper producer. Mexico and South African rand, both of them commodity-based economies. So really what we've got here is a currency is a CD that includes 5 currencies that are going to should move higher as commodities return or as commodity markets move higher. So that was the basis of this. They're equally weighted.
Yes.
So each of the 5 are equally weighted, and there is no upside, cap. So really,
it's unlimited as to the upside that you can return on this. Whatever those currencies perform over the 5 years is what you'll get.
And folks, so on this particular CD, you know, we've had Chris on many times, and we've had a lot of different CDs, and we'll continue to have them. This CD has to be funded by this Thursday. So it's July 14th. It's very easy to fund them. You call up Everbank. They'll open an account for you. Their phone number is 855-750-4051. That's 855-750-4051. And what you want to wrap your head around is this, is that the commodity market, you know, in the last 4 or 5 years, you know, got hurt, folks. These currencies got hurt. So what happens is if you're a believer that, you know, China's not over, and if you look at iron ore prices in Australia, we were just talking about Australia, guess what, folks? They're not. They've expanded like 39% this year, which seems like a lot, but they're not close to where they were. You know, I love how you put these things together, Chris, man. I'm telling you.
And again, you're talking about value, and these currencies were hit hard with the commodity drawdown.
Yes.
And so now you're buying them at what we think is some pretty good value. And you know, if they turn around, you're going to see a nice upside potential in this CD. And if they don't, then you get the return of your principal. So you've got no downside risk whatsoever. And in today's volatile market, we've seen all of these different, you know, there's pretty chaotic events in the markets here lately. You're protected from all of that. So, you know, worst case scenario, you get your principal back. With the rates that are being offered right now on fixed term 5-year CDs.
Yes.
Your opportunity cost is close to historic lows to buy something like this.
You know, what are we going to do, Chris, right? At some point, if interest rates go up, there's a whole generation. You and I know what high interest rates are, but like my son, right? He's 36, right? 37, and it's like they don't know like high interest rates.
No, yeah, and what we've been talking about and what we've been looking at, Tom, is lower for longer for interest rates, at least.
Yeah.
You know, for that's what the bond market's telling us. That's what you know, when we look at the central banks, you know, it seems to be a race to get to negative. So
I know
that certainly is not you know, does not bode well you know, for really the future growth of and that questions somewhat, you know, these equity levels that we're seeing. If you know, if the market's telling us we're not going to see a whole lot of growth, then what's going to support them? But
right. And what does happen is that commodities, folks, are a hard asset. It's going to go. Yep. Money's going to go to a hard asset. You know, it's this. It's amazing. You know, I was 2 nights ago, Chris, one of the most successful bond guys in Japan. You know, he has huge amounts of money under you know, management folks. He's coming out and saying, hey, guess what? You know, the United States is going to go under 1% on the 10-year. And I'm saying to myself, technically I can see it. Fundamentally, I still have a hard time with my hedge.
It's been hard to lose money if you're a bond trader here with the way the rates have been going. But yeah, and again, as you point out, that supports commodity. Commodities are hard assets. They're safe haven investments. These currencies, you know, we designed this CD to take advantage of currencies that were linked to those commodities and that were still at a pretty good value in here.
No doubt.
So again, it's Thursday. We're not doing a second issue of this one. We've this is your last opportunity. So if they want to do it, you know, they need to call that 855-750-4051, or just go out to your website and there's a great link with all the information.
There is. Well, listen, it's always a pleasure. You know, look forward to speaking to you again, and you know, we appreciate all the support, Chris.
You bet.
Thanks,
have a great
man.
day.
Have a great one and have a safe one. That's Chris Gaffney, folks, president of Everbank World Markets. His phone number, the phone number of Everbank, 855-750-4051. Or visit everbank.com/TFNN. Stay right there, folks. We're coming right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And Everbank's number, folks, is 855-750-4051. Or you can visit everbank.com/TFNN if you like to take a look at that market-based CD. Great product. Okay, so market-wise out here, well, let's see. Actually, we have some numbers that are coming out. Let's see if we can get some numbers out here. We have, let's see, TCS. Let's see if the container company, this is always a highly volatile stock, man. Oh, it's not going to be highly volatile anymore because it already got croaked. So the container company, that hasn't come out yet, but this is pretty amazing. Look at this. I haven't looked at this for a while. So this stock's only trading at $5.88 right now. Man, oh my God, look at this thing. And so this is down from $47 in a couple years. Wow, that was a one-way move. Yum Brands, that's coming out. Let's see if they've come out yet. So Yum closed at 86.23. Nope, that hasn't come out yet either. Oh no, that's tomorrow. That's tomorrow. Okay, so we get Yum tomorrow. We get CSX, and we have let's see, where's the other one? Let's go look at the. So what we do have is this. Thursday, you're going to have J.P. Morgan come out. J.P. Morgan is going to kick off the banks. J.P. Morgan out here today. They had all the banks, folks, had gapped down on the 24th. You know, between 23rd and 24th. The bottom of the gap on J.P. Morgan is $63.53. Now, he made it to 63.56. It closed at 63.20, but watch what you have here. This is subtle, but you had a small expansion of volume. So that's just from the last few days. But what that says is that, guess what? You're going to get in probably to the top of that bar, which is 64.15. That, more than likely, the financials have been some of the weakest. That being said, I expect that they're still going to be weak. They're not going to have a bigger retracement, meaning bounce on the way back up. But they're not done going down yet. So when they had closed on the 23rd of June, like Bank of America, the high of that day was $14.05. It looks to me like it's going to try to get up into that level. That's kind of the deviance inside of that. And all of these equities have been trading in the same place. The banks have been trading in the same place since November of 2013. So you're talking about almost 3 years. The Dow, the Dow did break today, but the Dow has been trading the same place since December of 2014. Let's go to Mark in Fort Collins. Hey, Mark, what's going on, brother?
Not too much, Tom. How are you?
I'm doing great, man. Yourself?
I'm doing wonderful.
Cool.
Stay cool. It's getting hot again.
Oh, is it?
Getting close to 100 here in Colorado pretty regularly right now.
Oh, my God. That's intense. Wow.
Global warming going on.
Yeah.
Anyways, hey. So tell me I think we all for some reason, get different readings for whatever tools we're using. But what are your readings for the last 3 days on the tick?
Okay, so the tick index, folks, this is a New York Exchange tick index. And what it means is that a high tick index means that people are buying at the offer, and simultaneously what they are doing is that when you get a plus or a minus, okay, they are like the high that I have for the last 4 days. Now, what happens, Mark, is that I don't use the opens. The bottom line is that it was Tim Wood that taught me this in 1994.
Okay.
And you don't use the opens, because what happens in the opens, folks, is that everything's going to tick up because it has to tick up. Do you know what I'm saying?
Okay, so you don't use that.
Right. And so the last 4 days, I do have a plus 1166. The high is the tick of 1421, but that was the open on the 8th.
Okay.
Then I have another plus of 991, and that's about it,
Okay. 'Cause I was showing, I guess what I'm showing, if I'm just looking at it daily, they're just showing me the high, which is, I had like close to 14.
It's 1421. It's the open, right? That's the what happens if you have my first book, folks. I put this in the first book I wrote. The opens you absolutely don't use. And so what happens is this, folks, is that there's approximately 5,000 equities and bond funds and bonds inside the NYA. Not just the Dow, the whole NASDAQ, the whole NYA. And what happens, the way that those numbers get generated is that you take the sells, the bid and the offer, right? And when you get a plus 1,400 like we have, that means that they had there was so many more people buying on the offer than the bid. Now, when you get a plus 1,400 mark intraday, that's a big deal. That's when you're getting near a high. That's what you're looking for. Yeah, because what happens there, it's very hard to get a plus 1,400 intraday, because what's going on, of course, people are always selling, people are always buying, and this is split second. This is how this is going, folks. So picture if you get 5,000 equities. Out of the 5,000, probably only about 3,500 trade continually. So let's say that if you got 2,000 that were buying on the offer and 1,500 that were selling on the bid, you'd only get a plus 500. So you can see how hard it is to get a plus 1,400.
Right.
And what's so wild, Mark, is that when you think about it, and you've been doing this a long time, is that it's like, folks, how the heck when greed comes in the markets, what happens is that everyone goes in the same time. And then when fear comes in the market, everyone goes at the same time. And it's like so weird, man, because it always happens. This isn't always too, folks, okay? It's like, and it's happened forever. It's not like, and it's like, why doesn't that stop? That's a tough one to wrap your head around, man.
Yeah. Hey, do you I just was looking at one other thing I wanted to have you take a look at if you have time. I was looking at the VIX.
Yeah.
And it's done 100% move from when it came down to 1290 on June 3rd. It's gone all the way up and then all the way back down. Do you use that much, the VIX? I know Basil uses the VIX quite a bit.
I don't. You know, because what happens is that, you know, the VIX is predicated, you know, on the option pricing of the nearest contract and the one after that.
Right.
And I've just always seen that, you know, guess what? When markets crash, the VIX goes through the moon, but how can you trade it? That means you're just throwing the dice saying, okay, the market's going to crash the next day, okay? Because you can't trade it that day, folks. It's already too late. Right. And what you can do, though, is that when it pops higher, you can basically sell premiums in the option market, and that's the way that I think you can use it really well. As to how low the VIX is, I remember years ago people saying that, oh, the VIX was low. I'm saying to myself, man, I've seen the VIX a lot lower. You know what I mean?
Right.
You know, so look, I'm pulling this. In 1994, it was at 10. It was at 8, 8.5 in 93.
Right.
You know, so I remember when it was been laying around 14, people 13, 14, thinking that's low. Well, I've seen it a lot lower, man. It's complacency. That's what it is.
All right.
Cooking, brother. Have a great one, man. Have a safe one. Stay right there, folks. We'll come right back. Dow finished up 120. NASDAQ up 34. S&P's up 15.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and we take a look at the XLE. So, first we're going to look at the oil. So oil got a good pop out here today, folks. We go take a look at this oil market. Oil was up 3.69%, which is pretty wild, man. I mean, that's really wild. There's no doubt. So we take a look at this. We're at $47.19. You have 270,000 contracts traded, and that has juice on the way up. Okay, so 46.97. Okay, so we're inside the higher range now. This is what oil had done. Oil last week broke down on, it looks like on Thursday, oil went from $48.94 to $45.57. Monster move, right? Broke last two swing points and broke them with volume. Well, it got back inside there today. And what I expect, once you get back inside a range, okay, it's like, okay, let's go to the top of the range. Now, the top of this range is pretty intense because the top of the range is $50 to $51. You know, we'll see whether we can make it up there. You know, I expect what you're going to see is probably the $50 mark. What's going to be cool here is as we get up to that level, will it have the juice, or is that the consolidation that we're in right now? Because what stopped it on the way down was where it had consolidated in April. Okay, so now that being said, because what I'm putting together here, folks, is this, is that the S&P took its highs out and it's away from the high of May of 2015. The Dow is right at it. The NASDAQ looks like, to me, like it's going to fail in a big way. It's way, way too low. And we're coming into earnings, so the volatility is going to be huge. Not so much this week, but next week. In order for the S&P to continue higher prices, the energy market has to hold up as well as the financials. Now, the financials don't have to go up. They just have to hold up. The energy market has been traded in the same place. Energy has been traded in the same place since April 27th. Now, what we had out here today is that the high of April 27th is $68.78. Well, we took that out today, and it had 15 million versus 21. So that's only 6 million, but when you take a look at it percentage-wise, that's a big takeout with a lot lighter volume. So if we go to ExxonMobil next, we take a look at ExxonMobil. Exxon up $1.06 today at 94.95. This also is continuing to catch a bid. And this looks like it wants to run into the 96 level, 97 level. Chevron, we take a look at Chevron. Chevron was up $1.39. You're at $106.78. Chevron also looks like it wants to get to, Chevron get to 112. So what I'd be looking for is it coming up to that. And by the way, with Chevron and Exxon, that's ice. You know, that all that is thus far is a counter trend bounce in a market that got crushed. You know, Chevron had gone down from $135 straight down to $69. Ice in this is $106.65, and that's where we're at right now. The top of ice, that's the bottom of ice. The top of ice is at 112. So when you look at something like that, that is a normal counter trend bounce on the way back up in a market that still wants lower price. So how these react are going to be crucial as to where the turnaround may come inside the S&P. The thing that's wild, if we go over to the S&P for a second, so let's go into the SPY. So what the SPY has done is this. We take a look at the SPY, we put this on the weekly basis, and what you're going to see is that the highs of the SPY going back to that May was we had 345 million shares traded. Now that's very light volume. You know, in 2 days we've had 171 million. You know, so it looks at this particular point that you're going to take that whole area out with volume. When we came back up and tested it, you had 445. You know, so the bottom line is that if in fact we have volume on this weekly as we get over that level, the bulls can make the case that, hey, this thing can not only go up, but go up pretty dramatically, because you could make the case that you could take the top of that and then take the bottom where that consolidation was $182. And where I'm getting 182, folks, is the lows that was established in October of 2014, as well as August of 2014, as well as January of 2016. So technically you could take that. I wouldn't take it, but technically you can. The reason I wouldn't, because you get all down volume there. But bottom line, if you just went with patterns, you could take that 181, you take the top of 212, and you can make the case that you're going up 1929, that's 31 points. That would be a SPY of 241. I know that there's a few people that would like to make the case that it's an ABC structure on the way up, but that is not an ABC on the way up. And the reason it's not an ABC on the way up is that we didn't go up with volume, we came down with volume, and that's not the definition of an ABC. An ABC up, folks, is you go up with volume, you pull back with lighter volume, you go up with volume. We pull back with way too much volume. Inside the Dow Industrials, so what we are going to know by Thursday is that where these banks are going to go. That's what we're going to definitely know. If we go over to IBM, let's go take a look at IBM, because that's a large weighting structure inside the Dow as well as the S&P. IBM comes out with its numbers on the 18th. So we're talking the 12th, 6th. So that's cool. That's going to be Monday, right? After the close. I believe that's going to be Monday. IBM right now is at 157. And this can get into, it looks to me, 161. IBM is doing a counter trend bounce, light volume, all of the above. IBM is trading where it was trading in 2011. The high in IBM is 215, but you can see when we came down with Big Blue, you came down October of 2014. You came down from 190 to 161, like boom, like nothing. You did that on 146 million shares. Well, you want to hear something bizarre? This is like really crazy. We went back up with 77 million. And we're coming into that area with dramatically lighter volume. So Big Blue is not going to be one of the equities that are helping the Dow Industrials continue to higher price. Inside the Dow today, what got it to higher price? Goldman Sachs was up 3%. DuPont was up 2.6. Caterpillar was up 2.5. And Nike was up 2.1. If we go over to Goldman, let's go take a look at Goldman, because Goldman's going to be coming out with numbers. They're coming out the 19th. Goldman's trading 156. And so Goldman has a high volume swing low, two of them. And Goldman can get to 168. I mean, that's on a monthly, 168 is game. That's the top of its consolidation right now. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Let's go take a look at the volume out here today. This is what you had with the volume. We had a 980 million on the NYSE out here today. On the NASDAQ Composite, what you had is 1.8 billion. If we do take a look at that composite, well, actually, let's go overseas first, because overseas is going to be open in another 6 hours. If we go to the Hang Seng first, where you're going to see the Hang Seng last night was up 344 points. Let me give you some percentages as we're doing this. Okay, so there we go. So the Hang Seng last night was up 1.6%. Shanghai was up 1.8%. The Nikkei was up 2.4%. Okay, so let's go to the Hang Seng first. Hang Seng was up 344. You're 21,200. And this is going to go after the last swing high, which is 21,634. So this is going to be pretty cool watching how this shakes out. But the way our markets acted today, bottom line, it looks like it wants to do it. And what the Hang Seng has just done is that it got over its downdraft from the 24th of June. You know, there's a lot of indices that have got over that right now. The Nikkei, let's go to the Nikkei in Japan. What you have with the Nikkei? Nikkei is right at it. Nikkei was up 383 points last night. And she's going to have to go 16,003. She got another 290 points to get up and over the downdraft. You know, but it looks like it wants to do it. The UK. So the UK was the first one that just took apart the downdraft. The UK, the day before the vote, it was at 63.80. We're at 66.80 right now. The UK was flat out here today. Now, the UK has only come up to ICE. ICE is 6,700 inside the UK. The highs in the UK, I believe, were about 7,200. Let me see. Yeah, 71.22. You know, so thus far, the UK hasn't been able to handle the 6,700 area. The DAX in Germany, now this is where this gets interesting, because the DAX in Germany is looking like our own NASDAQ, and has for quite a while, by the way. The DAX is just coming up to the gap. The gap in the DAX is 10,100, or 99.64. The DAX and the CAT are about 18% off their highs. The DAX high is 12,300. You know, the CAT and France is at 44.60, 44.33, and that high is really sick, man. I don't know, something's wrong with France. Check this out. The high in France, this is pretty cool. It never even got up to the 2007 high. It's 6,100, 61.68. We're going to see what kind of stocks are inside here. See, what ends up happening, which is pretty wild, is that the FTSE is kind of lined up like our Dow Industrials. The DAX, it doesn't seem like it should be lined up with the NASDAQ, but it is. You know, so I'm not quite sure what are the equities inside the DAX that are lining up like the NASDAQ. It would seem, if in fact, you know, that lineup is pretty good, would be the NASDAQ is all about growth stocks. That's where that thing goes. Amazon was Prime Day out here today. Amazon hit a new high. It's at 748, and you know you had some volume, you know, as it moved lower today. But guess what, folks? It rejected lower price. You know, so I suspect tonight when the numbers come out tomorrow morning on the Amazon Prime as to how much they did, we're going to see that thing pop once again. If you'd like to try any of my newsletters, just go to TFNN. Check them out under newsletters. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. We look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.